Welcome to Stock Therapy with Penny Queen. Today I have CEO Corrado De Gasperis with Comstock Inc. And we're going to be covering the mining segment of the business, as well as some follow-up questions on the other business segments. So welcome to the show, and thank you for being here.
Thanks for having me. It's a pleasure.
All right. So I know a lot of investors in Comstock have come because of the fuel side or the metals business. And I think that the mining business is really overlooked. And as I'm also a mining investor, I've been poring over the SK 1300 and looking at everything that you have. And I would like you to guide us through it and make sure that everybody who's watching understands what's there and the value of it.
Yeah, no, I'm happy to do that. It's ironic, right? Because this is my 14th year with the company, and really it was founded, and our namesake, of course, is the Comstock lode. And when I arrived, it was late 2009 when I first actually arrived here. And there's just a massive fragmentation of mineral claims, and we got to work on it. I mean, we consolidated what is today 12 square miles of contiguous mineral claims, like thousands of claims, a 6.5 mile contiguous mineralized strike that starts in the north right at Virginia City and goes all the way down through Gold Hill, through Silver City, all the way to Highway 50. And then, as you said, we've published our own SK 1300, was followed off the heels of an original NI 43101. Now we're reporting under the US standard. We're a New York publicly listed company, so that fits us better. We find the two standards to be very similar. But it's remarkable because consolidating the mineral claims, as much as that took, was actually not the most difficult part. The most difficult part was then entitling what turned out to be 150 years of spot zoning, confused ordinances, misaligned master plans. So we cleaned all of that up, right? We rezoned everything properly. We worked with Story County and Lyon County on their ordinances, and we published new ordinances that were mining friendly, mining supportive. Then we went further. We had to change one of the master plans just because there was a conflict between the zoning and the master plan. And now we have a fully entitled district. We have an entire portfolio of current permits, and we built out the entire infrastructure in a centralized location, meaning haul roads, meaning crusher, meaning leach facilities, meaning Merrill-Crowe processing and refining. All that infrastructure is in place, and we say we test mined, but I'm a little resistant to that term because we were moving 1 million to 2 million tons a year of material and really proved out, the whole concept. Unfortunately, when we were doing that, metal prices were bottoming close to $1,000 gold, and we were starting with a very, very small mine. So we paused our activities. And as you said, we pivoted into fuels, into urban mining, the solar panel recycling, which is turning out to be a whole nother bonanza for us. But we were steadfast in loving our mining assets, for lack of a better way to describe it. I can't tell you how many discussions and debates we had about disposing them or selling them, when gold was in the trough, when it was out of favor. And to some degree, junior miners, still struggle with getting back into favor. But cash flows, strong resources really speak, so we're excited about this third line of business, Comstock Mining, that, as you said, somewhat forgotten. So we'd love to be here and talk a bit more about it.
All right. Well, can you go over the history of the Comstock lode?
Yeah,
in
I would
general?
love to do that. I would love to do that. So in 1859, this curious purple mud was astounding the gold miners. In 1849, of course, there was the mother lode and the gold rush to California. 10 years later, as they were still prospecting for gold here, they were annoyed, if you will, for lack of a better term, of having to work through this, purplish silver, material. And finally, someone assayed it. The Grosch brothers were the first to do it, and it was almost pure silver sulfides, oozing out of the ground. And people don't appreciate it, but the Walker Lane Trend is one of the three major Nevada, mineral trends. The Walker Lane Trend, which starts in Virginia City here on the Comstock, goes 200 miles all the way into Arizona. And the Walker Lane Trend has produced 400 million ounces of silver in its history. But people are shocked to learn that in that 200-mile trend and 400 million ounces, the top 2 miles, the Comstock lode, produced almost 200 million of that 400 million.
Wow.
So the richness of the ore, the highness of the grades was almost unbelievable. And it sparked an innovation, an industrial innovation on the Comstock that not only designed new ways to mine underground, right, with timber set block sets, but dewatering, with major industrial equipment, really all the way through to cyanide leaching, which was perfected here at the Donovan Mill. All of these global industrial practices that we see today, many of them originated here out of necessity to access those incredibly high-grade ores. And there were 33 bonanzas that were discovered. Bonanza meaning a concentration of ore above a certain grade. 33 bonanzas. The big bonanza alone produced over 72 million ounces of silver. And then it was mined out, or so they said. If you go back to when picks and shovels were the main, tool for mining, and it was also manual, and there really wasn't any drilling, and certainly not advanced geological techniques to discovering these minerals, yes, they had hit, their limit. What we did is we reconsolidated then the whole district. And with that consolidation didn't just come 12 square miles of real estate. We had a second treasure trove of data. Data came with every acquisition. Data came with every, prospecting mine site. And then just aggregating the data allows you then to see trends and see information that others couldn't see in their local optima, in their narrow view of what they were trying to assess. And so we drilled at the Lucerne area, which was the center of this 6-mile contiguous trend, and we hit on nearly every hole. And we're not talking about revalidating old data. We were in some cases doing that to get a foothold. We were following trends and hitting on every hole. And then we went south to the Dayton, about 2 miles further south, and then just exact same thing. The Dayton was remarkable because we had some data that said there was about 70,000 ounces. It was an outdated report, but about 70,000 ounces of proven and probable reserves. So we said, let's put a hole in this. And that data went to about 200 feet. Our first drill hole in the Dayton was 900 feet. 577 of those 900 feet were mineralized at economic grade. And we knew, oh my goodness, starting right at the surface down, we were finding a lot of gold and silver. So, fast forwarding, we have 2 technical reports, 2 SK1300s, one for the Dayton, one for the Lucerne, about 300,000 ounces of measured and indicated gold in the Dayton, about 300,000 of indicated, in the Lucerne, and millions, of ounces of silver complementing that. Historically on the Comstock, there were mines that were producing over 100 ounces of silver for every ounce of gold that was produced. So 200 million ounces of silver from 8 million ounces of gold produced. However, when we mined, we were consistently pouring 20 ounces of silver for every ounce of gold. So not quite 100, but pretty darn good. So we're really excited about this asset, fully entitled, fully permitted, fully infrastructured, and now a resurgence, of gold prices and silver following too makes it extraordinarily economic.
Yeah, I mean, if we look at the numbers just at the Dayton mine,
Mhm.
and gold's sitting around $2,600 today, based on 293,000 ounces, that's 761 million right there.
Yeah.
A lot of people, a lot of analysts expect gold to go, through 3, maybe up to 5. I would rather just leave it right where it is right now and say that is
Yeah,
a ton of money with
yeah,
another 50 million in silver right there.
yeah.
And then when you look at Lucerne, I know it's an indicated resource, but it, it's so much. It's so
The probability of Lucerne to us is the same as Dayton, even though Dayton has measured and indicated in our technical report, our RSK 1300, the former published report for Lucerne had just indicated, but we mined Lucerne. We mined Lucerne for 4 years. So we don't see any difference in probabilities. Some consultants publish on different standards than others, but we're going to update that report too. What was great about that report was they told us which drill holes and which information would need to be certified to upgrade it all back up to measured. And it was very few, like a dozen holes. So we feel very, very good about that. But let me just come back to the Dayton and your comment. That $750 million of gold value, if you will, is reflected in 9 million tons of ore in that technical report. That 9 million tons of ore was carved out using a cutoff equivalent to $1,800 gold. If we move that cutoff to $2,300 equivalent, 9 million tons becomes 11 and a half, almost 12. That's a 30% increase in ore. And so the numbers start to get, incredible. Yes, revenue numbers are very exciting. Cash flow numbers are exciting too. $250 million from your starting point, pushing 400 million, at the $2,300 level. And as you said, we're already at $2,600 gold. And let me tell everyone, we are a fully infrastructured mine. We are miners. We mined for 4 years. We got 89% yield metallurgically from our ores. We got almost 60% yield metallurgically from our silver. So 89, almost 90% gold, 60% silver. By any Nevada oxide ore leaching standard, that's a gold standard. That's incredible. So we've done it. The infrastructure is in place. When people ask me, what are your 3 biggest risk factors putting a mine into production? Well, I'll tell you, number 1, what's the resource? Have you proved it up? Number 2, permitting takes forever. Number 3, capital to put the infrastructure into the ground. We have the resource, we have the permits, we have the infrastructure. It's all here. Anybody who wanted to mine could start mining. Now, why haven't we started mining? Because the Dayton resource is sitting on about 40 acres of 2,000 acres of a mineral trend. So there's no question I could green light it tomorrow and we could be in production within 2 years. So what we're going to do is we're going to green light the infill drilling that is required to finalize the mine plan. That'll give you the proven and probable reserves, right? We have taken it internally to that standard, But of course, we need to take it externally to that standard so that people believe us. Then when we do that infill drilling, we're going to do some step out drilling. Why? Because there are gaps in the pit that we engineered that are simply gaps because we don't have drill data. So we're going to infill, and then we're going to step out and over to that. And then we're going to step out a little bit further. And if those trends are connected, it could be a lot bigger. So we wouldn't be talking about 300,000. We have phase targets, 500, 700, a million. Okay. But what's beautiful about this risk profile is if we stepped out and it wasn't connected, we have a $300 to $400 million net cash flow asset, right? So we're starting, you think about the risk profile from where we're starting versus other junior miners, it's night and day, right? You can't even compare the two. So it's unfortunate that is a forgotten asset, right? Because it's a mature, production ready asset. It's not, it's not it is prospective in many ways, but it's also foundational in many ways. It's already established in many ways.
I can see how I can see how you would see that as a negative, but as somebody who's just getting into the story,
Oh
I'm
yeah.
really glad nobody was paying attention. I'm
Yeah.
glad that precious metals prices were in the gutter. So I want to take a quick step back
Sure.
because I know so many of Comstock investors haven't been in mining before. So I just want to make sure that they get like the basic understanding is, there's measured and indicated, which is in, at least in my terms, hey, we know this is there.
Yeah.
And there's the inferred, that basically with the information we have, it looks like this is here and we would need to prove it further.
Yeah. Yeah.
Those step outs, and if you think of the area that you're drilling as maybe as a bullseye, and you've got that area that you've really figured out that this is
Yeah.
where it is. Those step outs are, sometimes it's 50 meters, sometimes it's 100, whatever the group doing the report
Yeah.
typically
Yeah. Yeah.
allows.
Yeah.
And then the infill is just poking those holes along the path to verify what you have.
Exactly. Yeah.
And it's, there's lots of, I probably have 10 mining stocks in my portfolio, and based on risk, that's how I decide how much I can put into them. Hey, we've got 2 really good holes here. What does that say about the outlying area? I don't know. What do the trend lines look like? It's this technology that you're adding that I really appreciate. I mean, I know this is not new for Comstock to use innovation in all aspects of what you build, but there's still a lot of mining out there that really is barely above the pick and axe level. So to see you going back in and actually examining the data and starting off with something that is much more proven and reliable than a lot of the data out there. I mean, I'm very tickled with my find here.
It's great. Like I'll tell you, when I first came out, to complement what you said, I'm not a speculator, I'm not a treasure hunter, and there is a rugged maverick profile of these junior mining professionals. I say that with admiration, although I'm nothing like that, right? Like I'm nothing like that. And when they started showing me the data, I mean, the structural controls, the geophysics, we said this isn't speculative, right? You just need to prove it out, right? The thesis is right in front of us. And it isn't luck that we hit like on 95% of the holes. It isn't luck because we had a lot of data. It isn't luck because we really required our team to validate why they were drilling every hole. We don't give a lot of discretion, right? Like you need a thesis to say, I'm drilling this hole for this purpose. And then it can't be a loser because either you're going to prove your thesis or you're going to learn something from it and adapt, right? Real time. So that's proven out. When gold hit 1,000 and we stopped mining, there was widespread disappointment, right? Because we knew what we had, right? We just said, okay, maybe we just need to be patient here, with this asset. So, yeah, no, it's incredible. And when people come out and see it, usually they're taken back by how large it is. They really don't appreciate how large the district is, and how vast the land is. And so it's very cool. We like showing it. We like touring it. So yeah, we're really good to go. I guess let me just reemphasize one thing. Why hadn't somebody done this before? Well, consolidating the land wasn't easy. But as I mentioned before, entitling it and every definition of what that word means, not just the ordinances, not just the zonings, not just the master plan changes, not just the permits. That's a lot. Okay. That was much, much harder than consolidating the land. Then there's another intangible aspect to it that's very tangible, which is the social license. So the fact that we, in our first 3 years of mining, won Nevada's top safety award for our category. The fact that in our first 4 years of mining, we got 3 environmental reclamation excellence awards. I mean, those are not easily obtained. We got 2 from the state of Nevada that was voted on and awarded to us by 5 different regulatory bodies. They're all listed on the award, and then 1 from the federal government. That's extraordinary, and so what happened was a fear-based resistance became an embracement. People were saying, these guys, these gals, they're doing what they said they were going to do, but they're going above and beyond. A lot of what we did wasn't required to be done. For example, we committed to concurrent reclamation. So when we were mining Lucerne, we were backfilling one of the old pits, and then we fully reclaimed it. Then we fully restored the landscape. We won an award for that. And usually people don't even think about reclamation until 20 years later when they're finished mining. So it's not only extraordinary to get 2 environmental excellence, like the #1 environmental excellence award in the state of Nevada in the first 4 years of mining, but you don't even think about reclamation typically until when you're done. Or, I know it's getting better, so I don't want to say that like it's an absolute thing and no miners do that. It's becoming a more progressive thing, but we were early to that equation, and it really enabled the social license to do all the things that we're doing today.
I'm going to back you up on that. Like I said, I probably have 10 junior explorers in my portfolio, and as a clean tech investor, how they mine is very important to me.
Critical.
And I have companies in my portfolio whose only job is cleaning up after bad mining projects, right?
Yeah.
And maybe they weren't bad for the era, but they're definitely bad looking back with the environmental lens that we have now, knowing what's been destroyed. So I appreciate that a lot.
So
I know
let me complement that with another sideline, right? So somewhere in 2013, 2014, I was dragged kicking and screaming down Highway 50 to Silver Springs, which is about, 25, 30 minutes from here. And I was lobbied to invest in some real estate down there, and I've been getting beat up about it forever. I think we invested $5 million between 2013 and 2015 in some real estate, of which the comps are now valuing it at 55 million. So that was our foray outside of mining properties. And then we formed a company down there to acquire more real estate. We kind of tore a page out of the Comstock playbook, and most people don't talk about this, but we own just a little under 17.5% of a company called Sierra Springs Opportunity Fund, Inc. And it has industrial and commercial and residential real estate. And so far, about 50 million of other people's money. You know, there's other investors than Comstock in there, although Comstock's, 17.5%, you know, about $50 million committed. And that portfolio, including the Comstock 2 assets that I just mentioned, it's worth over $450 million. Okay, now fast forward and come back to the Comstock. The Dayton real estate is private land. The Spring Valley has thousands of acres of land. And we're saying to ourselves, well, geez, if this hilly, bumpy, ore-filled land could be mined and concurrently reclaimed, such that after, let's say, a 5 or 6 year mine life, you have a really well manicured landscape. Now, instead of some of the companies in your portfolio that are decommissioning reclamation liabilities, we have an asset. And I'm not going to get too speculative here, but if you even used Silver Springs land values, which would be lower than being this close to Carson City, you could be talking about hundreds of millions in residual asset value. So we've got something hidden here. You can call it a diamond in the rough. It feels like that, right? And we're being very thoughtful about our development plans. We're being not just mine development, but reclamation and post-productive uses. Because the Comstock is just as much a bedroom historic mining district, of course, historic mining district with bedroom communities, Virginia City, Gold Hill, Silver City, Dayton. And the Dayton mine sits between Silver City and Dayton. So, and it sits 20 minutes less actually to Carson City. So that's prime real estate.
I like the plan, and I think that everybody becomes much more of an environmentalist when you figure out that it makes resources work longer.
Yeah.
Right.
Yeah.
When you can profit off a resource over and over and over again, it's fantastic.
I'm going to be,
especially.
yeah. I'm going to be frank. Like in 2016, we had mined for 4 years. We were very proud of the safety and environmental awards. We were extremely proud of the logistical outcome that said almost 90% yield on these ores for gold, almost 60% for silver. I mean, metallurgically, process-wise, geological and geochemical competency, we were feeling pretty good. Making money, we felt like crap. Well, we had this tiny little test mine, as they call it, okay? And we felt like we weren't mining a pit, we were mining like a trench, right? It was alongside a highway. It was like walking a tightrope. Yet we did that. We got environmental awards, safety awards, record-breaking yields. Just give us a little more ore to work with here, folks. We were contained to a very small permitted area to prove ourselves. So we proved ourselves. We didn't make money. There was a little bit of I hate to use the word fatigue factor in me, but like frustration maybe is a better word. I wasn't tired, I was frustrated. Like we did so many things well, and by the way, everybody said this cannot be done. It wasn't until the following year that all of our permits were expanded. It wasn't carte blanche, but man, it was damn close. We got all our permits expanded when I sat back and I said, now I know that at least legally we're sustainable here, right? This is going to keep going, but the metal prices had bottomed, right? And so we weren't ready to go to the Dayton. We weren't ready to expand the Lucerne. We just weren't. We were sort of depleted, in proving ourselves, but we did. We proved ourselves, So then though I went to the board and I said, look, I ran Tech, which was one of the largest renewable material science supply chains in the world. Dealing with the largest oil and gas companies, dealing with the largest steel and aluminum companies. I said, we understand the supply chain. We understand these metals. We can do more than just what we've done so far. Hence, we went into Comstock Metals, recycling solar panels. Hence, we went into Comstock Fuels. We are an environmental company. Our mission is to decarbonize. So we went to the mining folks and said, shoot, we don't see how you guys are sustainable. But we love gold. And damn, we love silver. So we're not going to get rid of you. But we're having a hard time justifying capital allocation. Not because you're not economic, because you don't fit the mission. You're not aligned with our goal. Okay? So how can you guys come back and be sustainable? And remember, these guys won environmental awards. They're not schleps, but they come back and they're like, well, we could use electric vehicles. Boring. Well, we could use some renewable energy, around the mine. A little more interesting. Doesn't make the cut, right? Like, how can we truly be sustainable? And they were afraid, Penn. They were like, he's going to sell us, right? Like, they were afraid, right? And I would say they were upset too, right? We'd worked together for a decade, and like, who are these new guys? Who are these fuels guys? Who are these, metal recycling guys? We know metals. Long story short, right? They came back and said, what if we built a clean energy infrastructure around this thing, which on its own 2 feet would support itself, right? In other words, it would be smarter to use clean energy to fuel this mine. But what if we did it in a way that sustained after the mine? And what if we landscaped and reclaimed in a way where there'd be post-productive uses of the mine? We're essentially creating a whole new, I don't want to go crazy here, clean energy community, right? I said, now you're talking, right? In the meantime, gold hits 18, then hits 21, then hits 24, then hits 26, and they were like, well, maybe we don't need to do all this stuff. I said, no, we absolutely need to do all of this stuff, right?
Yeah.
Because we're not doing it. We don't see a conflict between doing it clean, doing it sustainably, right? And making money. We don't see a conflict. Would you spend an extra 30 or 40 million on reclamation if the asset's going to be worth 240 million when you're done? No
Oh,
brainer. No brainer.
absolutely.
No brainer.
But I don't think a lot of people have been thinking like that historically. I mean, a lot of mining was done with what can we get out of this right now, not how can I make this last longer? How can, a lot of mining has been done with as little capex as possible. Like, it's like, this is a goal, but right now there's this opportunity, right? I mean, that the term sheet has money in it specifically for this.
It's coming.
And for the investors who didn't get it before, let me know if I'm not being clear anywhere here on just how valuable the mining assets are. So this is, it's impressive to say the least. I mean, this, I didn't come looking for a mining play.
Yeah.
I came because of the clean tech, but as I keep digging and digging and digging, I know mining well. And I thought, how is this tucked in here? That's what I didn't get. Who didn't just, sell this off for a quick buck to move on?
Right.
And when you actually look, when you start going through the report, you see exactly why. It was, hey, it wasn't the time, but we're not going to let this go.
Right. And when you start thinking about, Comstock Metals, recycling solar panels, I've been shown numbers that, with 3 Nevada facilities, given the low end of the grade range we're seeing with the silver content, we could be the second largest silver producer in the state of Nevada. That would be sustainable. Well, what if we were refining, in some of these properties? What if we were, you see it isn't once you start thinking about sustainability, it's once you force and enforce that it must be sustainable, then either you do it or you die, right? So now innovation is bearing out, is being born through these conversations. And I don't want people to forget, this is a national historic landmark. Virginia City gets 6, 7, 800,000 tourists visiting every single year. Carson City is the capital of the state, is 20 minutes away. We're not in the middle of nowhere. We're not in the middle of nowhere. And in 2013, over a decade ago, the state's historical preservation officer, Ron James, and I formed a foundation called the Comstock Foundation for History and Culture. That foundation has hundreds of volunteers who are restoring some of the most prolific industrial mills. They just posted on LinkedIn yesterday, they got the stamps running again, right? So there is a lot to see when you come to the Comstock. And the notion that modern sustainable industrial activity can't coexist is flawed. It not only does it coexist, it thrives. So we're really excited about what this will become.
All right. I'm excited too. The one thing I forgot to ask before, when we were talking about the resources, was the depth.
Oh,
How
yeah.
how close to surface are we talking here?
Yeah, so it's remarkable. Like, the Dayton resource, when we first got that early report, it was actually, it was early to us, but it was written, I think, in the late 70s. They had gone down to 200 feet with mineralization immediately at surface, 5 feet, 10 feet, immediately at surface. We have a 240-foot adit right into this. If you come, we'll take you in there. 240-foot adit right into the side of the mountain. You walk into it, you're surrounded by mineralization. So we don't only have drill holes at surface down to 200. We have a shaft right through the middle of the heart of it, where you could just walk and see it. And then we were hitting down 500, 600, 700 feet. So it's a beautiful, and it's all oxide ores, fully leachable. We've run column tests on the metallurgy, high yielding. The Dayton actually yielded higher than the Lucerne when we did our original column tests, right?
Wow.
So, and Lucerne ended up to be spectacular in its results. So yeah, no, I think it's every risk factor that a very diligent, geological engineer or mining engineer would walk down. We don't only check it, we hit it right in the nose. We lived it. We lived it. We mined. The infrastructure was built. The haul roads were driven. The metal was poured. It was remarkable.
Yeah, I'm pretty excited at the amount that you were able to actually get, the yield. I think this is another education point for
Yeah.
people who aren't investors typically in mining, is that gold and silver and other precious metals kind of they adhere to other minerals, and sometimes it's there's different ways of leaching it to basically break that bond and separate it.
Right.
And it has varying levels of success. I mean,
Right. Right. So basically there's two monster categories. You have oxide ores, you have sulfides, okay? And in the oxide category, if it's gold only, you tend to use a carbon circuit to extract the gold. If it's in high volumes of silver, then you use a zinc circuit. So we use a zinc precipitate circuit, right, to extract the gold and silver. But even then, even if you look at oxide ore mines with high levels of silver content, they're lucky to get 45, 50% yields. We were at 60. They're usually ecstatic to get mid 70s for gold. We were at 90. Usually to get greater than 90% yields on anything, you need to mill it. You need to pulverize into a fine powder, to mill and get it. But to mill and process in that way requires hundreds and hundreds and hundreds of millions of capital typically, right? Whereas our entire leach and refining circuit and crusher was about 20 million, 25 million. So the economics were really good. I mean, if we just had a bigger permit and a bigger, deposit like the Dayton, it would have been, it will be spectacular.
I'm really excited to see what comes of it, especially being able to, infuse capital and get things moving faster. That's going to be absolutely thrilling. But if anybody wants some exciting yet boring reading, go to the website. On there, the Dayton report's like 177 pages.
Yeah.
You could probably get through reading, the first 7 or 8 pages, and you'd have a pretty good understanding of what's there, how they understand what's there. And those reports don't do a great job they never do a great job in letting investors know the potential, but they do a really good job of letting people know what's there. So it's sexy.
Yeah, no, it very much is. It's a technical validation that's prerequisite. Like emotion runs high in this industry for some reason. I can't quite explain it. I get emotional over it. So you have third parties validate the geology, validate the metallurgy, validate the ores, validate the deposit, validate the legalities, and really give an opinion. And so without reading 175 pages, you're right. The first 10, maybe 15 pages gives a nice executive summary. It summarizes the resources, and there's even a recommendation section. In our recommendation session, they're like, drill, baby, drill. Like, keep going. You've got a tiger by the tail here. So we just haven't been able to justify up until now allocating capital because the returns on solar panel recycling and the returns on fuels are mind-boggling, right? But now at $2,600 gold, these returns are amazing. So we're getting ready to do that, right? As you can see, we've done all the diligence, we've built the models, we've gotten the capital commitments, so now we're progressing on all of it.
All right, I think that was a pretty good overview of Comstock Mining. Is there anything else you want to add?
Yeah, just from an outlook perspective, we did mention that there were some claims way up to the north, I mean, literally into Virginia City, that for 14 years never really got our attention, frankly. And we got an offer to sell some of those claims. We had leased them, and looks like we're going to do that. That's nice, bring in a little bit of money for something that has nothing to do with anything that you and I just talked about. So that's very good. Don't want to confuse people when that comes out. And then, we're looking to do some drilling in 2025. We're looking to, infill, step out, prove up these resources with reserves. And look, it's funny, like the bad news will be if we step out, there's nothing else. We have a ridiculously valuable asset that we're ready to go with. If we step out and there's more, people will have to be a little more patient because we're going to be adding ounces to the inventory, okay? Safely, methodically, but excitingly.
So I've got to say that Comstock kind of reminds me of one of those families where everybody's successful. They all do different things, like those annoying kids are really good at piano, and then one's a brain surgeon, the other's an actress, or that sort of, because I keep looking at all the different verticals, and I'm happy with them, and I'm a happy person, but I'm a very pessimistic investor. So it would be really good to go through and kind of have some updates on the other verticals and any updates you have on the money end.
Yeah, absolutely. So I think, I don't think it's luck what you just said. We're very, very methodical in our process, right? We unusually like to face conflict every day. We like to face the conflict or the obstacle, the dilemma. Those words are synonymous to us. That's blocking us from getting to the goal. And so I think it's human nature to avoid those kind of conflicts, to avoid those confrontations. We've created a culture where it's not only encouraged, it's like exciting. Like we get into it. What's the conflict? What's blocking us, And look, we talked about selling those mining assets. Said, what's the conflict, right? Surface the conflict, surface the assumptions. Hey, it only costs us 2 million a year to carry not only a 12 square mile real estate package, but an entire current permitted platform and infrastructure. What if we lease some of our properties for, I don't know, 2 million a year? Now we got a free option on gold. Okay. That wasn't luck. That was debated. What should we do? Then with solar panels, we started with lithium-ion batteries, and guess what? The market wasn't materializing. And guess what? The commodities were challenged in terms of procuring those materials. It looked like it was evolving into a toll processing solution. And you know what? There was a half a dozen other people that looked pretty good at doing that. So why would we want to be in there if it's already being handled by somebody else? So we pivoted to photovoltaics, and we don't see a lot of competition. It's going to come, right? But we don't see it today, and we're scaling up fast. So to the update on Comstock Metals, we're securing new contracts literally every week. Our revenue tripled from Q2 to Q3. It's going to triple again here in Q4. And we're very focused now on two things: submitting the permits, which we just worked at length with the Nevada regulators to change their guidelines, modify their sort of approach to recycling. We did it in conjunction with the battery folks. It was funny because we were always the only solar panel guy in the room, but they're now approving a new guideline to facilitate our ability to recycle and resell these materials. Earlier or late last week, I'm sorry, we shipped our first full truckload, 12 tons of silver-rich tailings with a very, very high price yield off of the silver in those tailings. So to be clear, we don't yet have a solution where we're refining the tailings ourselves and pouring the silver. There's regulatory obstacles between recycling regulations and mining regulations, if you could believe that, okay? But we are now taking in panels, producing clean glass, producing clean aluminum, and producing clean silver tailings, and all three of those products are now being sold. So we have revenue from tipping fees coming in, we have revenues from the same tons going out the other side of the plant, and we have decommissioning service revenues for people who need help to dismantle these materials before we can renew them. So that's very, very exciting, and we're going to spend most of 2025 locking in this Southwest region, because that's where all the end-of-life panels are today, right? Substantially all. So things are going very, very well there. I think people are appreciative of that business. We're ahead there. We're ahead. We've already proven TRL7 because we've ran our demonstration facility for 6 months. For fuels, it's more dynamic, and for most people, that's going to be more exciting, So everybody knows that we announced the 3 projects in Australia. That team is highly sophisticated in the biofuels arena in that part of the world. They are rapidly moving to secure the full supply chain requirements for each site. They have feedstock. Now they're securing the other components. They're rapidly raising capital. Once they raise capital for the first site, we get the first $2.5 million of our engineering service fees, which is 6%, well, 3% for the demonstration facility, but 6% for the full-scale facilities, which will be 150 million plus of revenue over the next 4 or 5 years just for engineering services for just those 3 projects. But it's mushrooming. right? We're getting other countries interested. We're getting capital pools interested. Sometimes it's the airport that wants SAF. Sometimes it's the aviation company that wants offtake for SAF. Sometimes it's a capital source that wants to build the SAF hub. It's literally up and down the entire supply chain that we're engaged with. So you're going to see more commercial agreements of the similar ilk of the Australians this quarter. I mean, it's coming, soon. We're doing the same thing in the US, except in the US, we are on the front line, right, of the offtake agreements. We're on the front line of the feedstock and site selection agreements, and it's mushrooming as well, right? It's just getting bigger and bigger. Our biggest risk factor right now is just our own personal capacity to prioritize, and get these deals over the finish line, and then to your last question, we're moving full speed with capital. SBC, I had 2 days of meetings just 2 weeks ago. We have a tremendous amount of activity. We're following up. We're moving to get some funding very soon here. But we have other capital sources also knocking on the door, and so we have a good problem. We got a lot of projects, we got a lot of feasibility, and we got a lot of capital sources, and we're being very, very diligent. So people are fearful. People take no news as bad news, and they hurt themselves, because the reason there's no news is because we're working our butts off. We don't have time to do anything, right? But rest assured, when material agreements are completed, they will be announced. So
Okay.
I don't blame people for worrying, but it's not rational. It's not rational. And then I understand the markets are volatile. I understand we have elections. I understand, maybe this is a good thing, Penny, to talk about. People ask me continuously before the election, do we care which administration wins? And I said, I honestly believe we're agnostic, because we are not building solar farms, right? We're recycling the panels that were deployed 20 years ago. We're not chasing government grants. We have an economically feasible solution that we want to build, right? So we don't, I don't know how to say it. We don't need government support. And the programs that do impact our business are steadfast. They're not controversial. They're not being debated, So it's fascinating. I mean, I don't know how people feel about it. I take some measure of comfort that Elon Musk is in this equation somewhere, because the stuff that he's doing, we're doing, and but we don't need government programs. Quite frankly, if I was going to be really stern on the assessment, some of the earlier stage technologies that were really being fed by the Biden-Harris administration should be worried. Yeah, I don't know that spigot is going to keep flowing. That wasn't us, but not even a little bit.
Yeah, I think the most important part is that if you have technology that's economical,
Economical
it works in
works.
any administration,
Yeah,
right? If it makes money,
yeah,
it will do well.
yeah. And that's not luck either, right? We have zero tolerance to go into non-economic situations. We have zero tolerance. Our whole methodology is designed at how quickly we can disprove something. How fast can we get to the no? Our logic is the faster we get to the no, the more capacity and closer we are to the yes. That's it, right? It's not normal, right? Most entrepreneurs fall in love with their idea. We don't have that. We don't have that here. And if that isn't understood, it should be, because our actions speak loud. Okay, we tried to do something with mercury remediation. We killed it. We tried to do something with extracting oils, right? We killed it. We killed it. We tried to do something with lithium ion batteries. We killed it. So, but when we kill something, we don't go home and cry. We pivot to what we learned from that. And in lithium ion batteries, what we learned was that there wasn't a tsunami of batteries coming out today, right? And there was a tremendous amount of competition. What we learned was there was a whole segment of the market where there was a tsunami of solar panels coming out of the market, and nobody was attending to it. So we don't see any of it as failure. We see it as the TRL progression.
It's they say in marketing, you don't fail, you test.
You test, you learn, you
Testing.
listen.
I just had a conversation with one of my daughters earlier this week about successful businesses, and that most every successful person in business has a slew of failures in their past. And it's because you fail up. It's the only way to create something successful is to figure out what doesn't work or what doesn't work easily enough. What's worth my effort, what isn't.
Yeah.
That's, hey, let's deal with a giant pile of black mass with batteries. Maybe not. Let somebody
Maybe
else
not.
do it. Let's do some urban mining because it's going to work on all fronts.
Yeah. And we look at huge addressable markets, and we look at systems that are bottlenecked at a specific point, right? Which means most of the infrastructure is there, most of the process is there, but it's bottleneck. What's bottlenecking this, right? In fuels, it was feedstock, and there wasn't a technology that could process abundant feedstock. Yeah, there's plenty of technologies that could process used cooking oil. Plenty. That's not even going to make a dent in the market. It's got a ceiling. It's done. Okay. Solar panels, right? How can you eliminate the laminates, the plastics, the glues cleanly? We know there's gasification technologies for fuels. We know there's pyrolytic technologies for these metals. They're not clean.
No, pyrolysis sucks.
It sucks. It's so expensive. It's so poor yielding. It's so gunky. The maintenance is forever. We have a beautifully fluid solution, and I mean that figuratively and specifically. It flows. David, I love it when David says we have a melt flow. We have a melt flow. So anyway, it's not luck is my point, right? It's hard. We challenge daily. You'd be surprised if I went through the last 6 decision points, even in solar panels. People think it's like a straight line and we're just sprinting. No, challenging the regulators, right? We got the regulators to agree to change the definition of a secondary hazardous material. So instead of it being a liability, we can sell it as an asset. We had to do all that work. People think it's a layup. It's not a layup. If it was let me say it differently. If it was a layup, we wouldn't be doing it. Because if it was a layup, 17 other people would be doing it already.
Yeah.
We wouldn't be doing it, right? So yeah, we're confident because the team is competent, the team is dedicated, and the team knows how to handle complexity. Right? The team knows how to handle complexity. And the way they handle complexity is they simplify the solution. Let's look at this complex system, find the constraint, focus on the constraint, debottleneck it, huge value. And guess what? The rest of the infrastructure is already in place. When Elon Musk said he gave Tesla a less than 10% chance to succeed, I understand what he's saying. He's not just coming up with a car. He's not just coming up with an innovation in lithium-ion battery tech. He's got to build a whole freaking supply chain. And he's got to convince the whole world that it's better than all the infrastructure that's already in place. That's hard. We wouldn't do that. We wouldn't do that.
So you have to build the whole system and you got to sell people on it. But the second you start making money, people are much more sold.
Just to be clear, what we do is we look at the existing system, be it a massive global solar panel system, a massive global oil and gas system, full infrastructure all in place. And what's blocking them to get to the next level? We unblock that, right? So when we unblock that, then huge value is created, huge business is created, huge impact is created, but we don't have to replicate and create a whole new infrastructure. That's why we talk about partners so much, right? Existing refining capacity, existing feedstocks, existing farms, existing pulp and paper mills, existing sugarcane mills. We're going to leverage all that existing and have huge, huge throughput come out of it.
That's, I mean, it'll make a great book.
Make a couple
So
bucks. Yeah.
it'll make a great book.
This is great, Pen. I really appreciate your insights. Like you're the funnest to interview with. Yeah.
Well, thank you. Thank you. I mean, I've got a lot on the line here, so I'm excited and I'm paying attention. What would you say for investors? I know you can't throw out dates or times, but what would you say to investors about the next quarter?
Yeah. So we recalibrated the GenMat investment. I think you and I should. I think you've already asked me. We should talk about innovation next, right? But we just recalibrated the physics-based AI. We're very excited about how we recalibrated it because it gives us full access to the tech, and it brings almost to zero our spend. So we're very excited about that. We're essentially integrating physics-based, material science-based AI into our innovation capacity. So you'll hear about that probably this week. We're selling some mining assets, not consequential to anything we talked about today. You'll hear that next week. And then right on the heels of that, fuels, metals, fuels this quarter. And then capital is coming in, and capital is going to come in from where you guys expect it to, and capital is going to come in from places you didn't expect it to, right? Because we have a lot of people knocking on the door and they're strategic. So we like it very well.
These are all words I like, and they're in the order that I like them. So,
I know I can't always control the order, but sometimes it lines up,
well, I appreciate you taking the time to go over this with me and for everybody else who's watching. I know a lot of Comstock investors are watching. I think the last couple of videos have had over 1,000 views. So
Outstanding.
that makes me happy to see that people are actually paying attention. I hate it when people put their money places and they don't know what they're buying.
Outstanding.
So,
Yeah, no, that's great. That's really great.
so we'll hit innovations next,
Yeah,
and
let's do that.
it should be amazing. So thank you for your time today.
Thank you. Have a great day.